Excellencies, ladies and gentlemen, a very good morning to you. First, let me thank the ITU for inviting me to speak at this workshop, which in my view is both timely and critical to how we provide more efficient and widespread financial services in the future in the Caribbean. And we also take the opportunity to thank all the other sponsors of this workshop, to thank especially the Telecommunications Authority of Trinidad and Tobago and the government of Trinidad and Tobago for the very fine courtesies that they have extended to me so far on this visit. One of the key points people focus nowadays on when they consider the digital financial services is that these services can be extended to deliver basic financial services to financially excluded and underserved populations. These services use innovative technologies like mobile phone enabled solutions, electronic money models, and digital payment platforms, and so provide financial and other institutions with the prospect of reaching billions of new customers. Thus, banks and an expanding array of non-bank institutions have begun to offer digital financial services to these financially excluded and underserved peoples. These institutions have been building on the digital approaches that have been used for years by those already served by the formal financial sector. Consequently, millions of formerly excluded and underserved poor customers are moving from exclusively cash-based transactions to formal financial services such as payments, transfers, savings, credit, insurance, and to even securities by using a mobile phone, smartphone, or other digital access to the technology. Smart mobile devices have become an extension of human life for millions of people around the world. With a wide range of prices and specifications, people from every socioeconomic level now have access to devices that rival personal computers for power, speed, and accessibility. Now, when I started Central Banks of Barbados Management Information Systems back in 1982, our biggest computers then didn't match the smallest phones nowadays. So when I read that rivaling, when I compare to what I started with, it's not rivaling, they're far outdistancing those old things. In many nations, mobile telecommunications development has outstripped the more costly copper to fiber conversion or fiber installation. Thus, these mobile devices, such as cell phones and tablets, have become vital forms of connection, both in rural, isolated areas and in large cities. With the widespread use of the Internet and the World Wide Web, payment for goods and services has increasingly moved online, with credit cards allowing people and merchants to exchange funds without the use of cash. I'll come back to that in a minute or two. Banks and other financial institutions have used the Internet to drastically reduce the time and dangers involved in remitting money over international borders, allowing business speed and productivity to rise dramatically in the past 2 decades. Mobile wallets, therefore, stand at a crucial intersection of economic development and productivity. Through a combination of the widespread distribution of mobile devices and the interconnectivity of the Internet, mobile wallets allow far more persons worldwide to be linked together in secure global trade and economic participation. Digital financial inclusion, then, is evolving as the significant part of the digital financial services sector that is having most impact on the financially excluded and underserved. Digital financial inclusion involves the deployment of cost-saving digital means to reach currently financially excluded and underserved populations with a range of financial services suited to their needs, responsibly delivered at a cost that is affordable to customers and sustainable for providers. You know the benefits of digital financial inclusion. Firstly, there's the benefit of having access to formal financial services such as payments, transfers, savings, credit, insurance, and securities. Migration to account-based services typically expands over time as customers gain familiarity with and trust in the digital transactions platform. Government-to-person payments, such as conditional cash transfers that can enable digital stored value accounts, may prove to be a path for the financially excluded into the financial system. The costs that digital transactional platforms present to the provider and consequently to the customer are typically lower. These allow the customers to transact locally in irregular, tiny amounts, thereby helping them to manage their characteristically uneven income and expenses. And you know the discussion, the conversations we have had around the Caribbean about the costs of financial services, but the charges and fees levied by the financial institutions, particularly banks. This is an opportunity now for those charges to come down and for the consumer protection agencies and the central banking authorities to watch closely and see what happens with those charges as we build out the digital transactional platforms. Additional financial services tailored to customers' needs and financial circumstances are made possible by the payment, transfer, and value storage services embedded in the digital transactional platform itself and the data generated within it. As mobile devices and networks have gained processing power and bandwidth, the speed of operation has allowed complex instructions to be completed almost instantaneously at any time. Local funds can often be remitted and recognized in a few minutes. International fund transfers can happen in a few business days, often within one day. Such speed can be of terrific assistance during emergencies or imminent danger situations. Mobile devices are equipped with batteries, which allow use without dependence on a persistent supply of electricity. They are often capable of being efficiently recharged using off-grid solutions such as portable solar chargers and chemical batteries. This flexibility, along with the relative ease of implementing the mobile networks on a regional level, allows the internet to be accessed by millions of persons in rural and isolated areas. Such reach, combined with mobile payment solutions, expanded delivery solutions, and online shopping platforms, has allowed many small-scale artisans in some remote rural areas to sell local crafts to an international market, earning significant foreign exchange and improving their livelihoods, and more on that later as well. There are reduced risks of loss, theft, and other financial crimes posed by cash-based transactions, as well as reduced costs associated with transacting in cash and using informal providers. Notwithstanding the benefits, there are some risks against which adequate protection and risk management practices must be deployed. These include some retail agent-related risks. A retail agent functions as a third party acting on behalf of a bank, non-bank, or other financial institution to deal directly with customers under some contractual agreement. Armed with a digital device that is connected to communications infrastructure to transmit and receive transaction details, retail agents enable customers to convert cash into electronically stored value and to transform value back into cash electronically. Agents and agent networks introduce new operational, financial crime, and consumer risk, many of which are due to the physical distance between agents and the provider or agent network manager, and the resulting challenges to effective training and oversight. Also, the new providers offering services may not be subject to the consumer protection provisions that apply to banks and other traditional financial institutions. Operational risks include fraud, agent error, poor cash management by the agent, and poor data handling. In addition to the financial crime risks of fraud and theft, agents may fail to comply with anti-money laundering and combating the financing of terrorism rules, customer due diligence, handling records, and reporting suspicious transactions. You can see I'm a former deputy governor. The matter of the application of Know Your Customer, and nowadays Know Your Customer's Customer, those rules and processes, as well as those relating to combating terrorist financing, may have significant repercussions on the region as our countries seek to resolve the difficulties we all now face with correspondent banking relationships and the risk in our financial and payment systems. Hopefully, the digital footprint left by using digital financial services will help eventually in assisting financial institutions better to know their customers and their customers' customers. But in the immediate future, this may not be the case. And so the digital financial inclusion may create some problems for us in this area. Of course, the difficulties being experienced with correspondent banking relationships may also negatively impact on cross-border digital financial transactions, as such transactions encounter difficulty in being settled by foreign banks eventually. Such a situation will, of course, slow the growth of digital financial services in the region. Finally, agents may also act to reduce transparency or fail to handle customer data confidentially. However, those retail agents, particularly those located in low-income areas, are important since they can help drive down the delivery costs of financial services for underserved population. Considerable effort must therefore be given to managing these risks identified. We must not run away because of the risks. We must find ways of managing those risks so that we can contain the damage. Secondly, some risks associated with the digital transactional platform. Innovative digital financial services typically involve at least one bank and one non-bank in both the electronic storage and management of data and the holding of customer funds. The challenge here is the protection of the customer funds. Even if they are insured, even if they are pooled, and a third party such as a mobile network operator is responsible for storing and managing records of customers' account balances, there are still risks related to real-time accuracy and reconcilability of records of a failing holder of funds with the records of the entity managing the accounts. The quality and reliability of digital technology affect the risk of disrupted service and lost data, including payment instructions due to drop messages, as well as the risk of breach of privacy and security resulting from digital transmission and storage of data. These risks are further magnified because a large number of retail agents handle customers' transactional and other data and the profile of previously excluded and underserved customers. What are some of the other regulatory and policy issues? Firstly, the issue of transfer and apportioning of liabilities between parties, and of the respective parties' ability to cover their potential liabilities. Whenever responsibility for a transaction changes hands, the matter of who takes liability at the time of crossover arises. Along with this comes the issue of the size of the liability for errors or omissions or failures in transactions. Such liability could be high, particularly if it involves loss of private and sensitive data. And if there are questions about where the liability rests at some points in time, and if there are questions about the size of the liabilities, Then further concern arises over the capacity of the enterprises involved in these transactions to cover those liabilities. Once again, we're not running from them, identify the risk, and figure out how we deal with it in a way that enables us to go forward with the initiative. Interoperability. Interoperability is seen as an indispensable characteristic of financial and ICT infrastructures, and therefore for the widespread availability of digital financial services, which in turn effectively supports digital financial inclusion. Whereas the widespread availability of digital solutions provides persons with access to financial services, the various systems and services must interoperate to enable persons to transfer their money to any other individual without having to have multiple transaction accounts. And this is almost similar to the interconnection frameworks in the telecommunications service sector that allows consumers of one carrier to seamlessly communicate with a customer on another network. The reasons are obvious: removing increased and unnecessary costs of multiple accounts and removing the potential confusion in managers' multiple accounts. So when we get enthused about digital financial inclusion, we must make some realistic assessments of its potential in the region. Given the emphasis on digital financial inclusion, embracing those who are now excluded from the formal financial systems, we need to consider how much of the Caribbean is actually financially excluded and from what services and why. Let me suggest that this is an important bit of research that needs to be done quickly to help in our assessment of how many more Caribbean residents will be brought by digital financial inclusion into the formal financial systems. Another area of concern in the region in respect of financial services is the extent to which some people are not well served, not the ones who are excluded, but the ones who are not well served by the existing financial services arrangements. In assessing the value of digital financial inclusion in the region, we must therefore also ask how much of the region is financially underserved and in what areas. This is important if the offerings in financial services are going to improve and to expand the level of services provided to those who are underserved. A third area for the growth of digital financial inclusion is the low cost of the digital transactions. As I said earlier, we often hear of the high fees charged by financial institutions in the Caribbean, and one is driven to ask why the cost of financial transactions seems so high. One is also driven to ask if the factors underpinning digital financial inclusion will really reduce the cost of doing financial inclusion in the region. You know, sometimes we hear of things, these lovely concepts, these lovely things happening elsewhere, but somehow we can't get them to get down to us here in the Caribbean. There all seem all kind of blocks to do that. One was also asked, who does this high cost of financial transactions cause to be excluded or underserved? And how much do these costs increase the overall cost of doing business in the region, particularly for small and micro enterprises? We worry often about the financial exclusion of individuals, poor individuals, remote individuals, but there's a substantial issue of the underserving of the financial needs of very small and micro enterprises, even of some medium-sized enterprises in the region. We must see how digital financial inclusion can help us with that. And so this fourth area for attention in the Caribbean is the ability of medium-sized, small and micro enterprises in the region to use the digital financial infrastructure to sell their goods and services all around the world. The technology of digital financial inclusion seems to provide the opportunity for such businesses to use digital payments and ordering systems to ply their trade. But one still hears of difficulties of such businesses obtaining merchant accounts on terms that they can afford, because banks still seem to feel that the risks and costs associated with merchant accounts for these types of businesses require banks to provide these accounts only at great cost and high collateral levels. Connected with this area of concern is the logistics business in the region for fulfilling and distributing orders placed over the internet. I do not know whether our businesses are generally in position to make sure that they're able to meet these obligations, but they have to put themselves in position if you're going to make the most of the benefit of digital financial services and digital financial inclusion. All our economies in this region are small, open economies with constraints of foreign exchange reserves. Much of the financial value of transactions over the digital transaction platforms may involve the use of foreign exchange reserves. And typically, what we have seen in the Caribbean, that the technologies that have become very popular are ones that tend to consume foreign exchange. Very consumer-based, externally oriented consumer financing. There will therefore have to be some process of reconciling how what may become an increase in demand and use of scarce foreign exchange reserves becomes consistent with maintaining adequate levels of foreign exchange. Unless the digital transaction platform and the supporting structures lead to increases in foreign exchange earnings. What I'm saying is if you want to use the digital financial services to spend foreign exchange, better use them to earn more foreign exchange than you're spending. I can't help being a central banker. What are the implications for productivity and doing business in our economies and to increasing productivity growth? One benefit for our economies from digital financial services that may not have been deliberately studied or promoted is the impact of the digital financial inclusion on productivity in our economies. All our countries in the region are trying to increase productivity. The ability and propensity of our residents to do their financial and other transactions whenever they wish and wherever it's convenient to them seems propitious for the improvement in productivity and service levels in our countries. When these transactions are done without persons having to leave their work and without having to spend time and move into the places where the transactions would normally take place, everyone wins. The individual, the enterprise where the individual works, and the country. I suspect that the loss of benefit by those who profit from having to provide the logistics to move persons around is far less than the gain in productivity to the economy. It seems to me also that digital financial inclusion systems should make it easier for Caribbean residents to get remittances sent to them from family and friends outside the region and from other Caribbean countries. Remittances from abroad constitute a significant inflow of foreign exchange into all Caribbean economies, and the reduction in costs of making and receiving those remittances will be down to the benefit of our Caribbean residents. This benefit would then translate into greater spending in the local economies, as well as more foreign exchange reserves for our countries. The matter of increasing productivity brings to attention that of improving the way in which the government apparatus interacts with ordinary citizens in our countries. While apart from the government and citizen payments, one would expect that a digital financial inclusion platform would provide greater efficiency in payments by residents to the government in all areas. And one would also be moved to expect that the same platform would enable more conversation, quote unquote, more conversation between individuals and government departments on a wide array of business that people have to conduct with government. And the same platform that you use for one thing can be used for several other features in the society. To enable the continued growth of digital financial inclusion, the capacity of the telecommunication infrastructure has to be sufficiently large be available everywhere, grow fast enough, be always consistent in its quality everywhere, and be provided in cost packages that make it affordable to everyone who needs to use it. This is a piece I have to say to Canto when I see them, if I see them later in the year. Canto is the Association of Telecommunications Organizations. It must be sufficiently large, be available everywhere, grow fast enough, be always consistent in its quality everywhere, and be provided in cost packages that make it affordable to everyone who needs to use it. This will be a particular area of concern for policymakers and regulators. And it seems we will have to do our work faster, Mr. Bourne, on the universal conditions for our people, universal service funds. At this juncture, let me recognize and compliment ITU focus group on digital financial services. I am told that this focus group has developed some 85 policy recommendations and 28 supporting thematic reports. Of importance to us, the ITU has developed a practical toolkit that can be adapted to local needs. I note with interest that some of the core suggestions include the following. 1. Policymakers and regulators should support the growth of an open ecosystem for digital financial services that promotes innovation and ensures robust competition. 2. Regulators should standardize definitions of fraud types and require standardized electronic and timely fraud reporting from providers. 3. Access criteria for interoperability schemes should be clear, objective, publicly disclosed, and allow new participants, banks, and authorized or non-banks to join. Policymakers should promote initiatives and incentives that encourage merchants and other payment acceptors to accept electronic payments. And it goes on with some very useful recommendations. I'd like to recommend that you get hold of this IQ toolkit if you haven't already done so. And let us get together. The ITU, UNECLAP, the CTU, the various bankers associations, the central bankers, the anti-money laundering regulators, the technology providers for the digital financial services, the cybersecurity experts, and their consumer protection officials to see how we as a region can develop our regional digital financial services sector. That grouping should hasten its work and report in detail with recommendations for policy action to the policy regulators and regulations. Policy cannot be made on the basis of broad, generic recommendations. It has to come down and put into legislation, into regulations, and so it has to be specific. So I urge that group to work quickly, to work hard, and to send us at the policy-making regulatory level the specific recommendations in each area. And you don't have to wait till all the areas are done. You can send them forward area by area so that we can begin to deal with it from a legislative or policymakers' perspective. Digital financial services, through the attributes for digital financial inclusion, have got significant potential to provide a range of affordable, convenient, and secure banking services to the poor people, the small and micro enterprises in the region. We must proceed with the care that these services demand of us, but we must not be unduly slow in doing so. Ladies and gentlemen, I thank you.